looking at the positives, where do you think that there has been progress, Eric?
So, thank you for having me, and I think it's a very important topic. I think the biggest piece of progress has probably been in attention focused on the idea of investing in black women. Now, there's a difference between the idea of investing in black women and the reality of investing in black women. If you think about asset allocators, are asset allocators actually saying to fund managers, I refuse to put money behind you unless I see the following happen, that there are actually black women who are part of your portfolio? Are we seeing that fund managers are saying that what we're going to do is we're going to make sure that we have on our team, so that we expand our networks, the various individuals who are actually investing professionals and who have the ability to actually invest capital, that we have on our team actually black women who can then do certain things. So from my perspective, there's certainly been a lot of good lip service. I'm not confident that that has then translated to the actions by asset managers and the action by fund managers to actually get sufficient capital. And because of that, we still have those numbers that you see in the United States. You know, we're still missing $1 trillion of opportunity because there's an underinvestment in black businesses. In the UK, it's $75 billion. We are underinvesting, and that is not being added to the GDP. So,
thank you. That's really helpful. And I think in the UK, like you were saying, there's very similar figures, like less than 0.25% of venture capital goes to black business owners, which does seem like something to be addressed. And but do you feel like there's been progress in any particular areas from when you first started in this?
There's very small progress. Again, as Eric said, there's been a lot of lip service. I think a lot of the progress has actually come from very public companies who used investing into black women as a marketing tool, specifically after the George Floyd incident. And then there was a lot of talk in shop about what was going to be done or what could be done. But we haven't seen as much progress as we would like. The good things that have come out of it are, for example, SoftBank's Future Fund was supposed to be, I guess, a lip service, I believe, but actually saw results. And because of the results that were seen, actually turned into an evergreen fund. We're yet to see the deployment, but there has been some progress somewhat. And the fact of the matter is we often having to spout US figures because in the UK our data sources are so small because the numbers are even more dire, sadly. So the good thing is where we do have some success stories, we do have some Sharmadeans, to be able to spout and be able to say, actually, these are capable, talented individuals that we can invest in, and this is why you should invest in us so that we can then invest in these individuals. But I guess the progress is slower than the snail's pace, sadly, but incremental growth, I guess.
How about you, Sharmadean? How hopeful are you?
Hopeful would be the wrong word. I actually don't think there's been any progress. The numbers for venture capital to women have actually gone backwards. We're down 26%. It's now 2% of women have actually raised VC. So if you look at all of the charts, the funding for women peaked in 2018. There were some big rounds with like Glossier, etc. And now they've gone down and they continue to go down post-pandemic. And while I think the pandemic was definitely, an accelerator, I actually think it was going down anyway. As Charmaine said, I raised VC 4 years ago, right? So 4 years, I was one of the first black women to raise VC in the UK. There are only 38 black people, I believe, according to Extend Ventures, who've raised VC. So for me to have raised around 4 years ago, imagine if that was the average white male, that the one raised 4 years ago and you didn't have any more. Like, that would be a bizarre, right? That would be bizarro. So I actually think progress is going backwards. And the lip service thing I agree with, but what actually just needs to happen is more room for black women to experiment with capital in the same way that white founders are given that opportunity.
And something else that we've touched on is, so the general conclusion seems to be that progress where it has been there has been more about lip service, and in terms of concrete progress, it's been pretty thin on the ground. And we're also, of course, entering into a pretty interesting time economically and financially in the general context of the UK. What do you think that potentially has that could potentially do for kind of minority entrepreneurs going forwards right now? Eric?
Well, it's interesting, right? Because you have a dynamic that we haven't seen before. We actually have bargains here in the UK. And when we look at our portfolio, so ImpactX invests in underrepresented entrepreneurs in the UK and Europe. we look specifically at digital technology, health education, lifestyle, media and entertainment, places where women and people of color over-index across Europe and the UK. When we're looking at these particular populations and businesses are being built that are absolutely sensational businesses, what we do find is because the pound relative to the dollar has actually seen a bit of a sink, we're seeing these bargains that are available, and suddenly we're finding American companies that really want to take out organizations in our portfolio. We've got 25 companies in our portfolio. I think 4 of them are currently in conversations about being acquired. So the issue of actually getting exits, which is something that is absolutely imperative for these entrepreneurs. So Sharmadean needs an exit to prove that the next time that she's trying to start a business, because Sharmadean will, eventually run the world, that when she is doing that, there will be a number of people who want to come behind her because she's actually had a good exit. So these exits are absolutely useful. However, we're finding, just like everyone else who has a portfolio of assets, that these assets that are your most valuable assets, there are ways in which they're sniffing around to see whether or not we can actually get them out of the market, get them into our organization. Particularly the M&A activity is extreme at the moment. I'm glad to see that that is actually happening, and that's something which is relatively new for Black entrepreneurs here in the UK and in Europe. But it does worry me that we are going to be not getting these organizations to their full potential, but it is the nature of venture.
I would say even pre it being a bargain, a lot of minority founders within my communities were already looking to America for their next rounds anyway, which is a very, very bad look for British capital, right? The reasons will be culturally, there are more Black people in the US, so we feel like actually there are more high net worth individuals, there are more Black VCs, there are more Black people with wealth in the US that you can both aspire to, but that can also write those angel checks, which are actually key when you're starting out in those early days. So I think that culturally, a lot of people are looking to America to be like, actually here it's going to be a lot easier to raise money. They're a lot less risk averse than we are in the UK. And actually I've got instant scale if I crack the US. So I think for me, I love England, love London. I don't want to feel that I have to leave my country to find capital. I want to be able to reinvest back in the UK, reinvest back in London, and also hire people from the UK and give them work and employment.
And I think if we touch on what Sharmadean just said, if people are having to leave the country in order to seek capital, likely domicile elsewhere, knowing that even the British Business Bank said that it's likely that we're going to be leaning very heavily on SMEs, knowing that Black people are actually, Black women specifically, are the fastest growing group of small business owners in the world, then what does that mean for our economy? Knowing that we would no longer domicile here, raise here, employ here, and then have our successes and exits here, what does that mean for the general economy? And I think when we're looking at the effects of the current economic crisis that is looming or here, and we also need to think about the fact that there was already an issue with raising capital for Black founders. This will be definitely increased, and even where people are raising, where founders are raising, the down rounds that everybody is facing are going to be substantially lean heavier on those Black faces because of the social nuances that people don't really realize are taking place. So sometimes it's language, it's the way people present, it's just about a skin color. It's making people actually say, actually, maybe you're not capable. So we feel like you should price your round down, which means that you should be getting a worse deal than you should really be getting, based on what you look like or how you speak or how you present. And I think that those things are kind of really devastating effects, because it does mean that we're going to have a far worse economic crisis than we potentially could have, because those people will exit, will go to the States to where they feel welcome.
So thinking about what we can do in the UK and potential solutions, we've actually got a poll here, which I think people can contribute to. So it's saying for Black aspiring entrepreneurs, what would be most helpful for starting up a business? And yes, people in the audience and I think online can answer that. And one thing which I think comes up a lot is the potential of being over-mentored and underfunded is something which comes
Absolutely.
up all the time. So,
That's actually, Olivia, I'm looking at these answers in A, B, C. I'm just like, okay, really? What we're talking about is mentorship, which is at the bottom of the pile in terms of people coming to organizations, very far from being in decision-making positions. Venture capital and angel investors is sort of looking at people who are actually getting assets which have already been allocated by asset allocators. I'm sort of very curious about these as the potential answers. I really do believe the big answer to the question is that we need to spend more time with asset allocators, and asset allocators need to use their soft and hard power to say that there are things that we wish to see, and there are reasons why that is not simply a feel-good initiative, but it's a manner in which we can actually return capital in a fiduciarily responsible fashion. So I'm glad that people are going to be answering this question, but I think that the question is wrong. So just to let you know that, just to let you know.
okay, we'll keep that in mind, thank you. And so going from that, would you say that targets are the best way going forwards for asset allocators?
Ooh.
No.
You know, I was a person who, I agree with Ursula Burns, who's the vice chair of my advisory board. I agree with her that at one point I did not really believe in this idea of making sure that there were quotas. But at this point, we have tried everything else. We must have real targets. If we do not have these targets, it does not appear that organizations are willing to actually put in the work, even though the data shows us that by putting in the work and making the investments, you actually do get better returns. I mean, we've seen this through the Kauffman Foundation. We've seen this actually through McKinsey. It's been studied time and time again in terms of what is the premium that happens at exit and what is the amount of capital that is actually raised, which is increased if you have these diverse teams, particularly teams with women and people of color. All of that is proven. So the question as to why it is that we how do we actually have a method to ensure that we actually get capital into the hands of the people who can then make these contributions to the economy is something that might have to be legislated through quotas, targets, whatever we want to call it. I'm ready for it. I'm ready for it.
Okay.
And leaning on that, I would definitely say mandates, specifically knowing that the LPs, the asset allocators that invest into funds, etc., are a lot of them are public funds, right? And if we're educating the public and putting a mandate in place that they let them know where their money, your pension fund is going, and they understand that this pension fund is not being invested in the best fiduciary interests of myself and also doesn't reflect me and my community, how does that affect the way that people will invest? Knowing that people will actually call them to account, because the majority of people don't even understand that their funds are being invested elsewhere, let alone where they're going and how they're distributed and what that means for the wider economy. So I think that, as well as the current things that we've discussed, is something that we could actually really put out there.
Definitely, thank you. And yeah, I don't know what you think about quotas and if that's potentially a way forward or not.
I think I agree with, excuse me, what's been said on the panel. I would say that it's not always about the first touch point. So I feel like with a quota, you get the first touch point. There has been, in the last decade, an increase from a baseline of 0 of more people being funded. However, what happens after you get the money is quite important, which is that typically Black founders don't have the same networks and access to power that other founders might have. So what you'll get is a whole bunch of people raising at seed. But if you know anything about VC, you really need to get to your chasm, cross that chasm and get to Series A. Because once you've gotten to Series A, there's a huge increase in likelihood that you're going to have an exit. So I would say that while I managed to get capital, what I found really difficult were those networks. Believe it or not, I come from a creative background. I went to art school. I didn't know what a consultant was when I started. When I started a startup, I was like, wow, there's all these people, and they're in all of the startups. All of the, they went to the same universities and the same schools, etc. So I do think that while the quotas are important, what everyone in the room can actually do is think about network and how you bring Black founders into your network and make the right introductions to them for customers, suppliers, funding, etc. Because actually that is more valuable post-seed than just giving another check. And
actually, kind of leaning on that, because it's really helpful hearing about your own experience with you as well, with both of you. Were there any particular things which you found really helpful when you were kind of in the starting stages of building your businesses?
Are you speaking about when we was raising our fund? Or?
Yeah.
Yeah, okay. So I guess in starting the fund, I do say that everybody was pretty helpful. I called probably about 2,000 VCs. I, like Sharmadean, didn't have a background in tech. I had built a diverse modelling agency and not financial modelling, I have to say. So this is a complete, you have to, because people start spouting numbers at me and it gets like, hey. So it's really important to know that building from the ground up, it is really about those networks. It's about, I literally called like, who you're investing in, why you're investing in, what segments, which geographies, why, how, and it was generally a bit of a nuisance probably, but people were forgiving. And I think that when we look at that as in general, we realise how much we all have to offer. Most of us are going about our roles in and thinking that we can't change anything, right? But we built a village of mentors for the startups that we invest in, from company-wide, so from the CEOs to the COOs, all the way down to the first employees, to say, actually, what were your experiences? What helped you to keep on board? Everybody plays a role. So when you're starting a business, you may be a great creative, you may be really analytical, you may be a great dev, but you also need those teams and you need those networks. So those things are things that we can all think about in terms of how we can apply human capital as well as financial capital.
Thank you. So is that fair to say that mentorship does play some kind of
I think
role?
mentorship, as long as there is capital that flows as well, I think that we need to make sure that these founders are getting the money and the impetus of support that they need. But most importantly, they need the money to be able to have the runway, to be able to employ those people once you advise them on what they need to be doing. And then they need to be able to leverage future or networks in order to be able to get that secondary capital, because their runway extension is going to be necessary. And at some stage it becomes, I just need to not die, right? As a founder, I need to not die. I need my startup to continue in order to make sure that these stats don't say that this company failed because it was a terrible founder. They failed because there was no continuation of funding, and then that data feeds back. So when we're going to our fund allocators and saying, "Hey, invest in our funds because we can deliver on great startups," there aren't those cross questions as to why these startups are no longer in existence.
So financial and social capital working together, basically.
Can I say something on
course.
mentorship? You know, what we do at the Stack World is we power communities and internal networks. And the problem with mentorship is it's one-to-one. It is a one-to-one interaction that doesn't actually expand your network unless there are active steps to expand your network. Anyone who's studied network science or even just virology, now that we're all really familiar, knows that you need to have multiple touch points to expand your network, which then expands your power base, which then extends your ability to raise capital. What I would say is, rather than just think about mentorship or I would like to mentor someone, which is quite formal and transactional, I would say think about friendships and think about your community. Like, how many Black people do you have in your friend network is what I always say to people. Do you have any Black friends? Like, think about that, what that actually means, because how much more likely are you to introduce someone to someone who's going to help a friend versus just a mentee, which, you know, as I said, I believe is transactional. I think we can all really think about how we shape the world we live in by how we create our judgments and biases and tastes based on who we have in our network. Right now, in a hybrid work environment and in a post-pandemic work environment, the lines between work and home are consistently blurring. And I actually think that the lines between work colleagues and friendships are also blurring. And I truly believe that for this to change, it can't just be, oh, meet my mentee, which sounds a bit like poor me. Like, do you know what I mean? It's more like, I've got this incredible friend who's working on this. You really should check them out. That's always going to land way harder than being like my mentee.
So you're presenting each other on more of an equal footing.
On equal footing, exactly.
Yeah, I wonder what you were thinking, Eric, when in terms of firstly your own career and starting out, and what kind of helped you, and also, I guess, the difference between mentorship and maybe networking.
So I think about this issue just a bit, and in fact, I've written about it in this book. We Don't Need Permission. The reason I've written about it is because I think we over-rely on mentors. And mentors are, I love all that you all have said because there's this one-to-one relationship. It actually has a possibility of introducing you to bigger networks. But what I found, especially in terms of fundraising, and this is what we do. We spend all of our time fundraising, all three of us, right? When we're fundraising, the question is really less about, do I need someone to help me to become a better fundraiser, and I need more of a sponsor. Someone who is actually going to take a step and to put themselves at risk and to put me in front of the right sorts of people with the right type of introduction and the right sort of endorsement to get the next step done. And to actually do that in a way which reduces the cycle time from introduction to close and commitment, and so I get higher conversion rating. What I find very frequently is in the United States, when we are actually fundraising, and all of us talk about the United States as being a place to fundraise, I find that there is a closer set of relationships that actually do exist, and that the sponsorship is a bit more formalized. Here in the UK, I found it very challenging, whether we're talking about businesses, corporations, family offices, whether we're talking about foundations or endowments. I find all those organizations are very slow. And that indeed, if we're looking for innovation, even in terms of the activities that are associated with social impact investing, sort of diverse and emerging managers, we find so little leadership in Europe on these particular topics. Very little leadership. We find it from the United States. Maybe we should expect that because of Silicon Valley and the expectation in Boston and New York that there's lots of innovation that we export to the world. But I'm very sort of fascinated how few, whether they be mentors or whether they be sponsors, how few opportunities we actually have to actually convert into something that's tangible and helpful to us. I really don't, again, we started off talking about lip service. I don't need more conversation. We need action. And we need that action to be demonstrated by real support and real commitment and catalytic activity. And there's so little catalytic activity which is happening right now here in the UK and in Europe. And I'd like to call that out as being one of the major problems that I think all of us face as people of color, women, no matter what age we are. We find that to be a challenge, no matter how good our networks are.
Well, thank you for that call to action. I think we've got time for very quick rounds for all of you. So maybe ending on that note, what would all of you see? What's the kind of one low-hanging fruit, one action that you would like to see that you think could make kind of the biggest impact in this field? Maybe Sharmadean. I
would like to see more people angel investing in black women. You know, it doesn't matter how small the ticket is, could be £500, £5,000, but with that angel investment, you are putting more money into the black female economy, and effectively with an angel ticket usually comes relationships and the friendship that I mentioned earlier, so definitely write a check.
To the point, thank you.
Well, I love that. Definitely co-sign the write a check. And also, when reviewing specifically for asset managers investing in funds, looking beyond the typical, if we're looking at innovation, why are we not being innovative about the way we invest into emerging fund managers? For example, someone who doesn't speak the way you speak the language doesn't mean that they can't deliver. Someone who has invested smaller checks than they plan to doesn't mean that they can't invest larger checks. And then when we're looking at overall, if we look at the fact that because someone doesn't have a 12-year career history in finance doesn't mean they can't deliver. And that doesn't actually make sense because we already know that the figures for how many black women, for example, are already in the financial market in senior positions are so low. How does that hinder the barrier to entry? So definitely that, and yeah, invest in GoodSOIL VC, I guess, is the final word.
Absolutely. Invest in GoodSOIL, invest in ImpactX.
Indeed.
And I would say that I am speaking specifically, Olivia, for me, to the asset allocators. I am concerned if you are a foundation, if you are a corporation, if you are a endowment, if you are a fund of funds. I am very curious as to how few of those organizations are LPs in funds. We still are relying upon small checks from high net worth individuals. This is how ImpactX got started. We actually have money that came from black people, and I'm completely serious, it's only black people on the West Coast and the East Coast of the United States, in the UK, and then in France. That is all the money that we received from those individuals who are easy allies and people who understand that there is return potential that's available and non-concessionary return potential in the top quartile. We've been able to prove that at ImpactX. We imagine that that then is the calling card. Isn't that the ideal calling card to then go to institutional investors and say, someone has already taken the risk? We are actually now in a position where we can say to you, with this risk having been taken, that you can look at our track record and other sorts of things as a team. It's time to step up. But you're going to have to do something catalytic. It can't be a small sort of a check that you really don't want to get back. We would like this to be part of your actual funds that are necessary in order to deliver your returns, those key pieces of returns that you need. And we find it, and I find it very interesting that there is so much timidity. I don't know where it's from, but that's other people's business. And maybe it's the liquidity problems because the public markets are down. We don't know you well enough, and we really don't socialize with you. So we're not friends. And so, Eric, it's hard to fund you, or it's hard to fund Charmaine, et cetera, et cetera. There are a whole number of reasons, I'm sure, that are very logical. And then when someone says them to me, I'm sure I'd say, aha, I get it. But I really think that we're talking about something a bit more insidious than that, and that what we need to do is to have asset allocators, as I said before, to use their hard and soft power to actually put money behind these theses so that we can actually stop talking about them theoretically and have them proven out factually. That's what needs to be done.